What's up, everyone? Welcome back to the channel. Today I want to talk about something that completely changed the way I trade and look at the market. And this was really the thing that caused me to have my breakthrough as a trader and start to really see consistent results. And that thing is risk management and how your system of how you trade and your risk reward ratio and win rate tie directly into your profitability. So I'm going to share with you guys my approach to, how I evolved my trading system and kind of refined it from trading inverse fair value gaps, which had, obviously a lower risk reward, to now focusing on more of trading deviations, order flow, and levels. So first thing I'll say is part of the reason that I've decided to trade the way I do is because if you guys think about institutions and how institutions are trading, they're not looking for confirmations in the same way that you guys might be looking for an inverse fair value gap setup or who knows, a head and shoulder setup, right? They're trading off of institutional data, order flow data, numbers, math, and levels being price ranges, right? So discount, premium, OTE, things like that, right? So I started to look at the market a lot more in that way of how, institutions are looking at areas of interest rather than, a textbook setup, because I see a lot of people falling into pattern trading, which obviously is going to be an issue. Now, getting into more of the risk management side and, risk reward of your system, which is, the focus of this video. One of the main other reasons why I switched from trading inverse fair value gaps is because of this risk reward, right? For me, who trades a live account and live capital, let's just take a one-to-one into account here, right? Let's say you want to make $1,000 on the day, which, that's not a huge amount. If you trade a one-to-one system, that means you have to risk $1,000 to make $1,000. Now, let's put this into context with you guys who might be trading funded accounts, right? Let's say you get a top step evaluation and you have to make $3,000 to pass and not lose $2,000. If you're trading a one-to-one and you're trying to make $1,000 in a day, you will fail that account in 2 days if you lose 2 trades, right? Now, if you're trading a higher risk reward system, like we see over here with, I know this is a lot, but let's say 1 to 10, right? You can lose 20 trades roughly, right? And still not have failed that account. So right off the bat, that's just going to show you how the higher that your risk reward system is, the lower required win rate you need to be profitable, right? So lower risk reward systems like a 1-to-1 or less, or 1-to-2, they can still work, but they're going to require both very high accuracy and, the losses are going to be a lot more mentally intensive, as I've just said, right? So for me, I was not comfortable with risking $1,000 to make $1,000. It just did not seem right. And it didn't seem sustainable, right? When you think about your losing streaks, right? Because trading does come down to probabilities, right? And numbers. So inevitably, every trader, if you're in this for the long run, you are going to come across losing streaks. And if you're trading a lower risk reward system like this, a losing streak is going to wipe you out. Okay. This is what I mean by not sustainable. I mean, if you're taking multiple losses in a row with this type of risk reward, that's not good, obviously. And if you're a newer trader and you're trading this type of risk reward, yes, the actual setups being printed might be easier to read, but you're not going to have enough discretion to really have a high win rate. And so if you're trading this low risk reward, again, it's going to be really, really hard to actually see profits from trading, right? So we can kind of just go through the numbers here and look at, if you're trading inverse fair value gaps, right, you're waiting for this confirmation and entering after the close typically. And, for this to be valid, it's going to require a pretty large stop loss typically. So you're looking at 1-to-1, 1-to-1.5, 1-to-2, and you see how as your risk reward gets higher, your win rate, the amount that you need to win is decreasing to, stay break even or make profit. So another thing that you guys should look at is think about how trading is very personal, right? So there's no one way to trade or enter. I'm not telling you that you need to pick one of these ways of trading and, stick to that. But think about how you can possibly get better entries. So oftentimes when we see inverse gaps, especially on the 5-minute, right? Typically you see after that close, the next candle actually, will dump back inside to fill orders, maybe in the inverse gap CE, consequent encroachment, or at a change in the state level, right? So one thing you can do is just wait for a pullback back inside of, that range, that breaker that was created off of the inverse potentially, and look for an internal entry there, possibly like a reinversion if you want inside of there. And that's going to give you a lot more leeway with your risk to reward and, getting tighter entries. And then this is going to be a little bit different from trading inverse gaps at all in that kind of structure. But someone like me who's trading more of deviations and order flow, right? You're able to enter straight off of levels, and this is going to come with lower win rates potentially, as we see here, but massive upsides to the profits that you can make, right? So, and also, right, like, yes, we see that you can have a lower win rate with these and you still be profitable, but that doesn't mean that you're going to have a super low win rate, right? With enough discretion and time of seeing setups like this play out, you're going to be able to build enough repetition and understanding the signature and price that you're looking for, to the point where you're going to be able to identify very high quality setups, right? No matter what system you're trading. It's about time in the game. And I really recommend that you guys pick this system that's going to suit you best and set you up for the most success. And, personally, again, I spent time with it. I was profitable with it, but I knew there was more, as I've said. And yeah, I started to refine this into a model that looked more like this and refined it into something like this, which is, more of what I actually trade now. And if you guys, look at some of the greatest traders of all time, they have traded, similar systems to this, I would say. A lot higher risk to reward, because when trading high amounts of live capital, it's going to be a lot more consistent. It's going to allow you to have a lot more longevity in trading. And, especially for beginner traders, although this does require more discretion, it's going to allow you to, keep your mental in check, and your winners are going to eat your losers by far. So it's really going to be helpful for, passing evals, getting payouts, and also trading live capital. So yeah, I know this was simple and I didn't really break down actual trade examples of how you can enter in these ways. I'll link my free Discord down below so you guys can, learn more about how I'm actually entering. And I have some other videos up on the channel about, my actual entry model and system for getting these high risk reward trades. But yeah, I hope this was helpful. I hope you guys can implement what I've, talked about here. And yeah, if you guys have any other questions about any of this, leave a comment down below and I'll see you guys in the next one.